Hello again, everyone. In this technical analysis of the stock market video, I call it No Fear Again, because that seems to be exactly where we're at and what the market is telling us today. All right, we're going to take a look at the Dow Jones Industrial Average and look at the Elliott wave analysis of the Dow Industrials. We're going to take a look at the Philadelphia Semiconductor Index and a couple of my key indicators. All right, let's start off here with the Dow. So the Dow was up 301 points on Friday on the back of the huge jobs number. You know, it was a jobs number that beat expectations, but then they also raised the number of people who got employed or who got jobs in August and September. So a little bit of a double whammy, and the market just kept pushing all day on Friday. So that's the picture here. We're about 12 points or so shy of the all-time closing high back over here on July 15th. So we're very, very close, although I find it really interesting when I did a scan back through the 30 stocks, only 3 stocks are currently sitting at all-time highs. Apple, JP Morgan Chase, and United Technologies. Now there's another 3 or 4 that are close. Home Depot, Microsoft, Procter & Gamble, and Walmart are close, but they're not there. So only 3 out of 30 sitting at all-time highs when you got the Dow practically sitting at all-time highs. So I find that kind of interesting. Let's take a look at the Elliott wave picture that I've got. This is my preferred scenario right now, and this leans into a little more of a bullish scenario from the standpoint of, number one, first of all, let me just show you what I've got going on here. This is an ending diagonal pattern. I believe we're in the 5th wave. I think that the 4th wave, and I'm talking about 5 waves up off of the March 2009 low, okay? That's going to complete the 5th primary wave, okay? And in this 5th primary wave, we've had 4 waves, and we're in the 5th and final wave. The 5th intermediate wave, I've got it labeled as, and I think it's an ending diagonal based on the wave structure and what's happening. So ending diagonals, it consists of 5 waves of 3 wave structures. That's why you're seeing the A, B, C 3-wave type structures in here. Now, the real question is, what is going on right in here? So I'm leaning towards the fact that we could be still developing the 3rd wave, that we don't have it finished yet. This is a very real possibility. We just have a bigger drawn out 3-wave structure for the wave 3. Then we get a wave 4 pullback because, yes, wave 4 usually overlaps into wave 1 in an ending diagonal pattern. Then we'd have one more push up in here. Now, this is kind of a little more conservative, allowing more room for the bullish scenario. Here's a little more aggressive view, okay? Here's another pattern. This almost looks more like a channel pattern than an ending diagonal, but let's just go ahead and factor it in like this. This assumes that wave 3 is already complete and that this is wave 4, and that we've got this ABC pattern for wave 5, and then we're done, and that we are in the final stages in here of wave 5. It's a very real possibility. I do have it labeled as an alternate count. I should have put the title over here. I meant to do that. Actually, let me do that right now. And magically, I got that taken care of. Alternate wave 5, okay? And I'm talking about this wave 5 right here, coming up off the low in December of 2018. And so right now, it looks as an alternate count, we could very easily be in that 5th wave. So we're watching the daily in here, watching to see, does it start to break down? Does it start to close below the 10-day moving average? The other thing I forgot to show you, let me go back, is just show the weekly view so you can see what it did for the week. It's kind of interesting that, yeah, we were up 389 points for the week, but 301 of that all came on Friday. The other interesting thing is how much have we really gained, in the last, go back over here to the highs in September of last year, a year ago, September 2018. Okay, the close of September 2018 was 26,743.50. Here we are, we're up, basically about, 600 points in a year. Okay, so that's it. So it would be interesting to see, do we continue to push up into here? Now, when I go back and look at this count right here, and I look back at this little wave structure just like that, it looks very similar to what's going on with the semiconductors. Let me pull that up. Here's the Philadelphia Semiconductor Index, the SOXX, SOXX. You can see that right here. By the way, again, the time frame is in here daily, or you can see it down here where it says daily. And so right now, this looks like a beautiful ending diagonal, classic wedge type pattern. And many times when you have this type of pattern, you get a throw over, what we call a throw over of this trend line with connecting 1 and 3 for the 5th wave. Now, if this is truly a throw over, then this is going to need to start breaking down, okay? And yeah, we do have more wave. Let me see if I can get this detail in here. There we go. You know, again, the 3-wave structure that we're talking about, and I don't have any more detail than that here on the SOXX. But that is the picture. We look back at the daily in here. I'll be watching to see, do we start to close below the 10-day moving average? Do we get a couple of closes in a row below the 10-day average and start to roll over? So far, we haven't done that. So we'll see. Got my eye on this one. This could be leading us. It could be leading us. It has been leading us to the upside. There's no doubt. Semiconductors are up huge for the year right now. I know it's 40-some%. I was looking at SMH the other day. Let's take a look at the VIX. Okay, the VIX is basically staying down here in the basement. It continues to just, look how it came back down, closed at down 0.92, closed at 12.30. Right, you know, similar to what it did, you know, on Wednesday, I guess it was. But that pattern looks very eerily like what we had back in July. Now, granted, you know, once we got down into this territory, we seemed to bounce around. It took quite a few days before we came out of it and erupted out of it. You know, the 1st of August, that huge explosion. Remember, I put a video out in the summertime. I said, you know, the calm before the storm, then we had the storm. Well, that's why I labeled this video, No Fear Again. That's where we're at. You know, there's just no fear priced into this market right now. Everybody's a little bit complacent. Everybody, it's getting real easy. And the market just keeps pushing higher. So it's going to be interesting. I think we need to stay on alert. And one last thing we want to look at in here is the high yield bond fund. HYG continued to sell off. Look what's happened over the last week. I find this really interesting that all of a sudden we're getting this. After staying in sync with the market, HYG is basically saying risk off. Okay? When you have HYG dropping like this, it's saying risk off. When it's in tune with the market, it's saying, yeah, I've got the appetite for animal spirits, risk on, etc. But right now, this is just the opposite of the S&P 500, for example, or the Dow Industrials. Doesn't matter what you look at in terms of what it's doing in terms of trending higher, and then you look at and see what HYG is signaling right now. So watching this pretty closely also. Okay, that's it for this weekend. If you felt like the video was helpful, please give it the thumbs up. And if you're not a subscriber, hit the subscriber button. And if you'd like to have more of this kind of information on a regular basis, head on over to joehenches.net. That's this right here. And check out, well, number one, I've got some posts out there. And then you can check out the membership or subscribe to the free video updates. All right, everyone, that's it for this weekend. Have a great weekend. We'll talk to you on the next video.